Hi guys, today we will discuss Euro US dollar pair on the intraday chart, 4-hourly chart. Now the buy sell signals that you're seeing are from the daily chart. So from the daily chart you can see how to buy and sell the previous lecture. But just let's look at it further. Just let's look at it on the 4-hourly chart, the half day mark, so that we can understand how the market works. Now this is an engulfing bullish candle. You buy. Now just to give you an insight, previously it was rising on the daily level. But now it's intraday level, so let's look at it. Now we bought right here and waited for it. Now it's going down. So we could have sold it here, because it's eating the previous candle. We sold it here, waited, and it's again a buy signal. We bought it again. Same pull. And then wait. It makes this kind of a candle. Now this kind of candle is usually extremely confusing, because on that day, it's like going everywhere, up, down, and that's an extremely painful day of trading. But remember, that's not a bad candle. It shows you that it has increased the high, but the lows are within the previous lower limits, which is not that bad candle. And once this type of candle comes in, that's bullish. Why? Because a gap is created, and as we discussed earlier, gaps are good. They are exceptional, but they always come back to fill them. So remember, it will come back to fill it, but will be like failing to fill it fully. Now if it goes red candle and then comes back up, then it will eventually go lower. Reason is simple, and that simplicity is that it will be trying again and again to come back and fill that low. Now if you look at this red candle, it did fill up much of the gap and basically fulfilled the theory of coming back to fulfilling it. Now you might ask, then why on earth I bought it here? Because I wanted to show you that you have to follow the plan no matter what. You cannot leave it just like that. Otherwise, through my experience, I would not have bought it. Reason? Because you know it will come back down. And even if you miss that pair, there are like thousands of other pair following US dollar or following euro. What's the problem? You can jump into that. The point is, you have to trade on the game plan. Now right here it's engulfing bull, so you bought it. Wait. It goes down. Now that's not a good thing. Now that's the reason I always tell my students not to jump into the intraday level, because intraday level always does this. See, now it goes up, down. Now the concept that I am trying to bring is, this is a box, and on the intraday basis there will be many boxes created. So remember, there is a problem on the intraday level. But the concept is, whenever you see this kind of trade, many trades going around in circles and you're losing money, then you have to look at what it does after that. Now the basic presumption is it should be crossing this previous high. But if you look at it in hindsight, it did closed higher, but it's now pointing again lower, which is not a good mark. Wait, it goes lower. No candlestick is telling you to buy. Now this is telling you to buy. Buy it. But be vigilant. Boom, it goes down. So your stop loss on the low of that candle will help you get out. This low. Now it's going lower. Wait, it goes higher. Boom, it goes lower. Now the thing to note is intraday level. If you look at it, it made a high, but like on the longer term, it's a double top. And now it's going for the kill down. If it breaks this low, then the lows are broken and you will have problems. Now it's again going up. But the concept that I'm trying to bring is, let me just show you more. It goes up, up, up. This is my concept. On a down run, you'll find many exceptionally long red candles and smaller green candles. Now this theory is like I've developed my own. You won't find it anywhere in books, but this is my own theory and an important theory. Remember, whenever you see longer red candles, but like the next few green candles are extremely small within the body of that red candle, that's bad. That's exceptionally bad. Now, this was like 3 candles, but this red candle had many candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 15, 18, 20, 22 candles. Not good. Again red candle. And it again comes back up. Again taking many candles and not crossing the high. That's what I call the touch of the devil. If you see huge falls, then there is something definitely wrong with that stock or with that forex pair. Reason? Because you have to understand why these large candles are made. These are made because let's presume I am shorting it. So I'll be shorting it fast. Now why on earth am I shorting it fast? Because I know some insider news that you don't. And as I know that insider news is coming within the next 5 days, so I would want the price to go lower. First of all, I short it, it goes lower, and then the price slowly and gradually comes up. Now, why does it come up slowly and gradually? Because I keep on shorting it. Although my velocity is slow on the rise up, but I'm short selling it. So basically, I short sold it on this high, and then I short sold it on the way up, but with a reduced velocity. And then I increase it again, and now it's again like going up, and I'm shorting it. And it falls off again. Now the thing to note, I'm zooming out to show you. This was the low, right? This was the higher low, right? This was a higher low. But the highs, this was a higher high, this was a lower high, this was a lower high. So highs were getting lower, lows were getting higher. Confusion is prevailing. And now it's breaking the low. Now what does it mean? Short selling is higher. And I told you right here that short selling was higher because the red candles were dominating. If I just zoom out, I will show you whenever red and green candles are dominating, you will see bull and bear run. Now this is daily mark that we have discussed earlier. This was a red candle, then they were trying to come back up, again it was a red candle. Then they were again trying to come back up. So eventually it stayed within a straight band. Why? Because red candles were higher. Now let's move out. Right here on the bull run, green candles were dominating. Red candles were on the fall and were not going beyond the body of this large green candle. And that was a bull run because green candles were dominating. If we just move further back, you'll find the same thing. Again, and again. It keeps on repeating. Red candles comes in, they repeat the bearish method. Although it didn't went lower, but if I just zoom out, I will show you Wait a minute. Yep, right here. Let me just zoom out to show you. Now, although you cannot see the colors completely right, but just look at the biggest gains. This was the biggest gain. This was the biggest gain. This was the biggest gain. Now look at the biggest 4-hourly falls. This is one of the biggest. Now on the chart, you're seeing start of April till September end. So it's what? April, May, June, July, August, September. 6 months. Within 6 months, in the initial forward way, you're seeing green candles, up candles, up candles, up candles, up candles. But then it's down candle. This is the first down candle, and then this is the second down candle, and then this is the third down candle. But if I just make a horizontal line from this high, because this was the first fall, what do you see? What do you see? If I zoom in, you will see this is the high. This is the high where all the big black candles are concentrated. Either their close is there or their open is there. Their close is there, their close is there. And now it's going lower. So it tells you this was the turning point. Although it moved higher. Because if I am owning shares and I see this kind of a thing happening, then I will be selling on these tops. Because if I own 1,000,000 shares, then I have a disadvantage. And that disadvantage is not with you, but with the bigger player, bigger fish. The disadvantage is that I cannot just sell them off within an hour, but you can. Now I cannot, so I have to look for signals before the fall. I have to understand what is happening. Now, I'm not telling you to get out of the stock right here. I'm telling you to wait and see more and more of the black candles. Once you see them more and more, remember there is something wrong. Because as I told you earlier, bigger green candles are the bull signal. Now they were bigger right here, right here. You are happy they were bigger right here. But eventually those bigger candles got smaller in size of the black candles. And that's the start of the downtrend. That's the fall start. See, it goes lower. It does come back up. Now it will never be going down automatically. It will come back up. It will always come back up. Why? To make the highs lower. This high is again lower. This is not even crossing this high. And this is again a big black candle. Why big black candle? Because it should have opened on the close right here at 1.18. It opened with a gap down. So you will look at it from here. The day closed lower. Because on the day, once you will be seeing your loss statement, you will be seeing losses from here, not from here. So it's a big black candle. But as we know the gap rules, it will come back to fill it. It goes lower and comes back up, comes back up, comes back up. Now the highs are getting lower. That's not a good sign. So it means it won't fill it. And it didn't. Now it's again coming back up and it's filling it. See? So right here we thought it won't, but then again it made a bullish engulfing candle right here and it did came back up. Now it has filled it. Now it's going down. Coming back up, 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 and moving up. I was wrong. It didn't went down. But how to know that your personal opinion is wrong or not? The answer, follow the plan. Candlestick. I just showed you my personal opinion was wrong. But why didn't the price fall off? Because there is no engulfing bearish candle. Simply, if I would have bought it right here on the engulfing bull, I would have stayed bullish. Right here, I would have got out. Right here. And this is the same line that we drew on the first fall. Goes lower, lower, and now lower. Now again, candlestick is telling you to buy. Now, this is another candlestick that we need to discuss. This one. Always remember, anything with an exceptionally high high or an exceptionally lower low are a candlestick that tells you a story in its own right. Now this is an exceptionally lower low. Now the point is, this was the first high. So it fell off, fell off, fell off. Then suddenly it rose up on the intraday basis and went down. Now this high acts as a double top. Not a good thing. Because if you're buying, that's a bad stuff. But if you're short selling, that's good. Because you want the price to go lower in a short selling method. But in a buy, this is a good mark. Because it's showing higher lows. And it moves up. It did fall off. See? But it will move up. Now that's what I call the long-term thinking. The highs were getting lower, but now if you look at it, if I just zoom out, lows are starting to form higher. This low, although on the longer term, it doesn't make anything. It doesn't even show exceptionally, but the eventual lows are getting higher, which makes it a bull run is in the making. But right here, it did broke it and it's all gone. So always remember, if it falls like this, get out. Now this candle is again exceptionally red. And if you remember the rule, that's not a good mark. And eventually it goes even further lower. If I zoom out, then this low will also be formed. Let me make a line on this low. Now this is the lower line. If I just zoom out, it's at the exact high point. The exact high point. That's what I'm trying to tell you. Remember to understand. Now the stock is in a bearish mode. Why? Because again, the black candles are dominating. The green candles are not. Now right here, green candles did offered a comeback. But if you look at it, were they also the extreme high point? No, they were not. They were again smaller ones. But the black ones were higher, higher, higher. So it tells you to understand what is happening. Now it's going up. But is it going up? No. Because the red candles dominate it. It's just making fools. The retail investor are being fooled right here. You as a retail investor is fooled in the November mark of 2017. And it will go lower. See, it went lower, came back up. But that backup is what I call failed mark. And see this high, the again exceptionally high point. Let me zoom in to show you. Here, that's again marking, not a good sign. It's again telling you there is something wrong. And just look at their black candles. These two black candles are exceptional. The price moves straight up. Now it goes higher, higher, and touched higher. If I zoom in, I will show you the high marks. The high marks are still lower. That's what the point is. Understand what is really happening. Who is the buyer and who is the seller. And it will change your trading plan. Now candlestick, I have told you how it works. It's easy, but you have to understand what is happening. Now, let me zoom out and tell you till August, we followed for the daily plan where we were all bullish. And then eventually it was a lower plan. After that in this intraday chapter. But if I move to the weekly chart, we were in 2017 right here. Just look at it. You will be astonished. Now, this is the weekly chart. It was rising, rising, rising. And then this was the intraday chart. It was falling off. And on the intraday level, if I just zoom in further, wait a minute. Right here, till August, we were on the daily level. And this is September, right? These 3-4 candles. In September, you can see it's not pointing higher, it's pointing lower. It broke this low right here. This candle's low is 1.1854. This low is 1.1717. That's September 25. And it did make a lower low. This is the second line, the blue line that we made. Remember? And it went lower. This is the first line that we made from where the short selling started. You can see these two lines. They made it exceptional. But the weekly candlestick told you in advance, although not that advanced, but it still told you earlier, which would have saved you money. That's how the game is. That's how the game is. Thank you.